I would like to call upon Ustaz Muhammad Nazri Cik to discuss further on the same issue. The floor is yours, Ustaz. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillah wassalatu wassalamu ala Rasulillah wa ala alihi wa ashabihi wa man nasarahu wa wala. Mr. Chairperson and fellow panelists, colleagues, first and foremost I would like to thank Ben Rakyat for inviting me to share my thoughts on this topic this afternoon. And today we are talking on muhdathatil umur, something which is considered bid'ah hasanah, newly established things, and the topics was not discussed in the Turathul Fiqh, in the literatures of fiqh. Even the Islamic Bank itself is something new. The Islamic Bank was only established, the first attempt to establish Islamic Bank happened back in 1960s in Mesir, and then followed by the establishment of the first Islamic commercial bank in Dubai in 1972, and here in Malaysia in 1983. For the last 100 years before we established Bank Islam in Malaysia, community here transact with conventional bank. In 1857, the first conventional bank was established here in Penang, the Standard Mercantile Bank of London, India and China. And the bank are offering the banking business, which is the business of financial intermediaries between the surplus units in the economy and the deficit units in the economy. From that point, people approach the bank with two different caps. When they come to the bank to put their money, of course they are looking for higher return. And the same guy, when they approach Islamic bank or conventional bank for loan or for liquidity, they are looking for lower rate. But the bank, being a financial intermediary, offering products to rich persons. We are not giving products for poor person. That's the segment of ijtima'i, not the segment of tijari, the segment of business for a bank. That's my strong remark this afternoon. So when people come to place money, of course, they have access. And when people come for financing, the first question to be answered by the customer is about the ability to pay, or conventionally to repay the loan granted by the bank to the customer. So that's the bank. And when we first established Islamic Bank in the world, the movement at the global market is can be considered as increasingly regulated market. Even the standard setting bodies such as Basel, they produce a lot of new standards with regard to capital adequacy and so on. And Islamic Bank have to comply with the same standard. So the theory of Sharia governance, for example, it is new theory. We only can find the notion of hisbah in the fiqh literatures. The notion of hisbah, whereby the government perform a role to ensure that the players in the market are performing their roles and responsibility in a good manner. That's an element of managing the market conduct of the players. So we can see, like Sheikh Dr. Wahbah Az-Zuhaili, when he picked a statement from Umar Al-Khattab in the first page of his book, Mu'amalat Maliyah Mu'asirah, the contemporary Islamic transactions. When you open the book, you will find a statement from Umar Al-Khattab when Umar went to the market and bring with him a stick, asa, and he said, Ya ma'ashar tujar, la yabi' fi suqina man la yafqah, wa illa aklu riba ridan am abah. So Umar said that, oh traders, do not trade here if you don't have adequate knowledge with regard to trading according to Sharia teachings, failing which you may consume riba willingly or unwillingly. So that's the element of isbah showed by Umar. And I will say that that was among the first attempt to perform governance without having a proper definition of Sharia governance. Okay? We can only find a proper definition of Sharia governance after establishment of Islamic Financial IFSB, Islamic Financial Services Board, when IFSB issued the IFSB 10 on the Sharia governance system. And prior to that, IFSB issued in 2007 the IFSB 1 on the guiding principles on risk management for Islamic financial institutions. So in this document, we found the first definition on Sharia compliant risk, and we found the classification of risk for Islamic financial institutions, which make them different from the conventional counterpart as explained by the first speaker just now. So the document mentioned that Islamic Bank, we are exposing ourselves to the common risk of a banking institution, of a financial intermediary, exposing ourselves to the credit risk. But the only difference will be for conventional bank, it is more on the risk of the failure from the customer to repay the loan. For the Islamic bank, it can be the risk or the failure of the customer to repay the rental under the rule of ijara, or to repay the selling price under the rule of for sale-based transactions such as murabaha, istisna, and so on. And there is no element of credit risk in theory for musyarakah and mudarabah, because musyarakah and mudarabah are different from the normal debt-based transactions. Although, when IFSB introduced the IFSB 2 Capital Adequacy Standard to facilitate implementation of Basel II with regard to capital adequacy for Islamic banking institutions, so FSB took the same approach introduced by Basel for equity base by introducing the risk weightage of 300 and 400 for equity based transaction, mudarabah and musyarakah exposure. Alhamdulillah, in Malaysia, Bank Negara was trying to facilitate the offering of musyarakah and mudarabah by reducing the capital charge, credit risk capital charge for mudarabah and musyarakah from 300, 400 to 150, but yet to see offerings of mudarabah and musyarakah exposures in the market. And again, the market rates, for example, same thing, because we are operating a financial intermediary. The rate of return risk, for example, although it is classified as unique risk for Islamic bank, my opinion, it can also be taken as a common risk for both Islamic bank and conventional bank. But the only difference between us and conventional bank is our challenge to give better return to the customer, because if you can see the difference between the two, normally I can classify into three. Number one, for conventional bank, on the borrowings, on the liability side, normally the exposure is fixed. But on the asset side, the financing is more on floating. So previously, we at Islamic Bank, our return is floating, but our return to depositors is floating, and the return from the asset side is floating as well. So this is more challenging to manage, because the mudarabah behavior of taking deposit will make the bank to share the return to depositors of mudarabah based on the performance of assets. So we take deposit based on mudarabah. There is no confirmation to the customer what is the return to be paid by the bank, but you will receive a return based on the performance of the assets, the fund that we use to finance specific assets. So this make difference between Islamic bank and conventional bank. In addition to that, as explained by the first speaker just now on the Sharia compliant risk, Sharia compliant risk. Alhamdulillah, in Malaysia, because we have a very streamlined process in terms of Sharia. Even products offering in the market, the biggest portfolio is BBA, Inah, or Tawarruk. But if you go to other part of the world, take for example Pakistan, what are their offerings to the customers? So the exposure of the bank to possible Sharia breaches are higher compared to Islamic bank here. And the bankers must be more knowledgeable in terms of Sharia compared to bankers in Malaysia. Take for example musyarakah. We here in Malaysia, I believe we have only small portfolio of musyarakah financing for project and small portfolio of musyarakah mutanakisah for asset acquisition, but we don't have musyarakah mutanakisah for cash financing. Here we provide facility to customer on the working capital and cash financing based on either Inah or Tawarruk. But in the jurisdiction such as Pakistan, Inah and Tawarruk, his share in the property for a price of 100,000 ringgit, and beginning from this point, the bank is the co-owner of the asset. Or another alternative, ijarah with the element of sale and leaseback. The bank purchase the asset from the customer for cash, and the bank lease back the asset to the customer for principal plus profit. Take for example, customer require 100,000 ringgit, the bank purchase 100,000 ringgit, the bank lease back for 100,000 ringgit plus profit. But the challenge is on the marketability of the product. The customer must have asset in their portfolio prior to approaching the bank to get the working capital or cash financing. A young graduate in Malaysia, for example, without Inah and Tawarruk, approach the bank looking for facility, cash financing. They want to get married, and the future mother-in-law asks for 20,000 ringgit. The bank will ask, do you have any property that the bank may invest in? Then we form a musyarakah relationship with you, or can you please sell your property to the bank in order to get this cash, and then the bank will lease it back to you. So I believe when I first graduated from university, I have nothing, only a motorcycle. Only a motorcycle. So that's the challenge, okay? Take istisna, for example. What is istisna here in Malaysia? We apply istisna only to finance acquisition of asset. How we deal with financing of sales? We have by ordained acceptable, which is acceptable to Sharia Advisory Council of Bernegara being the apex authority here in Malaysia. But by ordained is not acceptable over there. So how they structure a product to finance the sales of the customer? Customer sometime upon selling of the asset to the customer, to their end buyer, they face financial difficulty, they require money in order to pay salary and so on. Here in Malaysia, based on by ordained, the customer may sell the right to the debt to the bank on discounted basis. But sometimes over there, the structure based on istisna to finance sale. When the customer accept the offer or booking from an end buyer, the bank will terminate, or both parties will agree to terminate, iqalah, the booking, and the bank will book directly. Take for example Ministry of Defence. The bank will book from Ministry of Defence, and then this is the first istisna, and the second istisna, the bank will enter into istisna with the customer, and customer will become sani', and the bank will become mustasna', and the bank will sell the asset upon completion to Ministry of Defence, for example. So here, by having this, the bank does not only expose to the failure to execute the istisna according to the requirements of Sharia, but at the same time will expose itself to the risk of incompletion of the asset. And looking from capital adequacy perspective, the bank have to set aside the capital charge for istisna. For istisna is higher compared to normal tawarruk or bay'ul inah structure as being applied in Malaysia right now. So what I'm trying to tell you is there is the difference between conventional and Islamic in terms of risk, and I would like to share on the exposure of other part of the world compared to our common exposure here in Malaysia. Even the first definition of Sharia compliant risk was introduced by FSB. The risk arising from the failure of the bank to comply with the Sharia rules and principles as determined by the Sharia regulatory councils. So it goes back to a specific market. Anything approved in Malaysia may not be considered as approved in Pakistan, and anything approved in Pakistan may not be considered as approved here in Malaysia. Take for example, for Sharia scholars in Pakistan, they allow selling of currency on deferred payment basis as the alternative for trade finance facility, but it is not acceptable here in Malaysia. In Indonesia, the National Sharia Advisory Body allow selling of gold bar on deferred payment basis, but it is not acceptable to the majority of scholars around the world, including in Malaysia. Inah is acceptable here, but not acceptable in the other part of the world. So the treatment may be different. But in the future, I believe that if you go through the recommendation by FSB in the capital adequacy standard, you will find something on the capital charge for operational risk. So this is something which is emerging. I consider emerging risk for Islamic Bank in Malaysia. The right of the regulator to increase the capital charge of operational risk for Islamic Bank with regard to Sharia compliant risk, because Sharia compliant risk is classified under operational risk according to the document. So currently, if we take basic indicator approach, for example, to compute the capital charge of operational risk, the computation is 15% time average 3 years loss data. So take our Sharia governance document issued by Bank Negara back in 2011 as a date. We will require 3 years loss data in order to get the average of 3 years loss data. Bank Negara just introduced in 2012 the guideline on the reporting of Sharia non-compliance to Bank Negara. So most probably 2013, 14, and 15, beginning 2016, Bank Negara will have adequate data to begin imposition of additional capital charge for operational risk. I applaud the initiative taken by Bank Negara because it will motivate the industry to properly manage the Sharia compliant risk in the industry. With regard to compliance, for me, as yet, compliance is more on regulatory compliance and more on providing the validation, in addition to independence assurance to be granted by CIA, internal audit. And so based on the document in the market for non-player here, Bank Negara just introduced or just sent the concept paper on compliance to Islamic banks. So when we go through the document, so we believe that Bank Negara now is recommending that the role of compliance officer or chief compliance officer to be given same treatment with to CIA and CRO. So that's make the industry as a whole as increasingly regulated industry, and we believe we should take the initiative as a good initiative from Bank Negara in order to safeguard the interest of all parties in the market. So that's my opinion departing from the presentation by the first speaker just now. Thank you very much.
Thank you very much, Ustaz Nazri. Ustaz had actually discussed on a few matters, particularly on Hisbah, IFSB, Basel II, and also the challenge on the better return to the customers in comparison between the Islamic banking and also the conventional banking. Apart from that, just for the information to all the participants, Bank Negara had actually issued the Sharia governance framework for Islamic financial institution, which was effective starting from January 2011, had brought a new dimension and evolution phase in Malaysian Islamic banking. The issuance of Bank Negara Sharia governance framework indicates the commitment of regulator in enhancing Sharia governance of Malaysian Islamic financial institution. Okay. Moving forward, I would like to call upon again Encik Khairuddin to discuss on the next subtopic on the areas of enhancement and the way forward. The floor is yours, Mr. Khairuddin.
Bismillahirrahmanirrahim. I think the industry has gone many decades since the inception of Bank Islam in 1983. We have already have Tabung Haji since 1960s. Then the evolution in the global market, talking about the Islamic, like our brother here saying, and then back in 1990s, we introduced the Islamic banking window, okay, or interest-free banking at that particular time, then changed to, interest-free banking schemes, then changed to the Islamic banking schemes back in 1993. Now we already have a full-fledged Islamic bank in Malaysia and already commanding a sizable assets in the banking industry. So how are we going to move forward? In the areas of risk management and compliance, the issue at hand, which is still boggling my mind in a way, is basically, we do take note there are differences between conventional and Islamic banking operations. And certainly we don't want to reinvent the wheel, right? But how can you ask the Islamic bank to use the same tools, the same methodologies, the same way of measuring the risk, and then put it inside the Islamic banking? So it's like asking the same person different shoes and putting it, even though you know that the size may not fit. So in other words, what I'm trying to say is, one size does not fit all. Okay. So there are uniqueness, and there is a need for us to relook at how are we going to identify, assess, measure all these things. And what is lacking currently is basically in terms of the tools, the methodologies, the models, specifically addressing the inherent risk in the Islamic banking operation. Do we have that? No. We just import. And then when we talk as like it's the same as conventional. Agreed, there is a credit risk, there's a market risk. But there are certain elements in terms of the transformation of risk in a transaction. Do we capture that? No, we don't. So at the end of the day, if there is any risk, we put it and then we try to assess it in terms of the operational risk. So this is one part that I think going forward, there are a lot of efforts needs to be thought through, and probably from the researchers and the practitioners come together and relook and on what would be the best way for us in managing the risk of the Islamic banking institutions. So when we look at in terms of risk mitigants for the Islamic banking, certainly you're talking about the hedging mechanism, all those things is still in a infant stage. So there are a lot of instruments not available for Islamic. Right. So that posing to the Islamic banking, how are we going to manage the exposure that we have already in our book? You're talking about the rate of return risk, you're talking about the liquidity, and so on and so forth, and yet we are handicapped in terms of the tools to mitigate such risk. As the industry grows, a lot of people interested to join and jumping into the bandwagon. But every one of us has to ask ourselves, when you are working in Islamic bank, do you really understand what is the philosophy and the principle of Islamic banking? Do you understand the contracts? Can you differentiate between the terms financing and loan? You have to ask yourself, because you are now offering or selling a product of Islamic banking. There are permissible and non-permissible, the activities, the issue of Sharia non-compliance, the sequence of documents that has to be signed to ensure that it is valid under the Islamic contracts. From the back end to the front end. So these are the things which I think going forward, the level of competency in terms of the basic knowledge of Islamic finance in terms of the Sharia, you have to have it. And by having that, of course, right now we have many institutions offering the Islamic finance education. So as we go along, what the industry needs is basically what we call subject matter experts. And the pools need to be expanded. We need to have truly what we call Islamic banker. We need to have those who can understand managing the risk, understand the inherent risk, understand the steps, and will be able to think in terms of what will be the options available, how to mitigate such exposure, and going forward, the kind of products that are going to meet the requirements of the customer. So at the end of the day, you're talking about going forward, we need to have an enabling infrastructure taking into account the uniqueness of Islamic banking business models, the risk and reward complexions in terms of the transactions, as well as the various aspects within the operating environment. And last but not least, I think one thing we have to understand here, yes, we have a few already in existence, few decades, but if you compare to the conventional, still very far. Yes, we have grew quite fast in terms of the complexity, the sophistication. But the expectation is increasing. You expect in terms of from the customer on the asset side, always telling us that the Islamic finance product expensive. On the other hand, the depositor side says your return is lower than the conventional. So which is which? So what I'm trying to say here is one has to have an understanding of the whole thing in managing the balance sheet of an Islamic bank, where it consists various contracts, giving exposure in terms of different kind of risk. But the infrastructure that supporting the Islamic banking industry need to be enhanced. we need to have this level playing field if you are going to compete in a dual banking system. There's not many countries that only have one banking systems. Most of us basically having a dual banking system, which basically, while we are competing within the Islamic banking institutions, we are actually competing with the conventional banking. So this is basically war outside there. And everybody will basically looking at the best and attractive rates that you can offer, as well as good services. So with that, I think I've just looking from the perspective of areas of enhancement. I think the first one I just mentioned is talking about the risk tools, methodologies, and models, the introductions of new risk mitigants instruments, the enhancement of the pool of subject matter experts and Islamic bankers in the industry, in terms of the level playing field with regards to the documentations, all those things, judiciary, which basically will be able to support us to grow probably another leap going forward. With that, thank you very much.
Thank you very much, Mr. Khairuddin. Mr. Khairuddin had actually discussed in detail with us on the interest-free banking scheme to the Islamic banking system. He had also mentioned on the hedging mechanism, and last but not least on the philosophy and also the principle of the Islamic banking. I would like to call again Ustaz Nazri to discuss on the same subtopic. The floor is yours, Ustaz. Thank you.
Thank you. I have PowerPoint to share. Number one, to the researchers as well as the public at large. Moving forward, I hope we can understand the real meanings of risk. So as yet we can see that many researchers, when we discuss on the topic of risk, they have they would like to bring the discussion of risk towards equity only. Only to promote Islamic bank to expose themselves to the risk of equity market. That's all. That's the majority of researchers especially. And even sometimes some of the speakers would like to say that debt-based or equity-based is better than debt-based. So being in the industry, I don't agree with such interpretation that the equity-based is more Sharia compliant compared to debt-based. Even looking from the hadith perspective, there is one hadith that Prophet Muhammad sallallahu alaihi wasallam mentioned on both debt and equity based. Thalathatun fihin al-barakah. There are the blessing in three things. The first one is muqaradah, and the second one is al-bay'u ila ajal. The first one, muqaradah or mudarabah, represents the equity business, and then the second one is bay' ila ajal, the selling of things on different payment basis, which represent debt based. So both are. The Prophet Muhammad sallallahu alaihi wasallam said that there are blessing in these two, plus another thing, khaltul birru bish-sha'ir lil bayt ila lil bay', which is not related to this topic this afternoon. So sometimes taking exposure on that is better to achieve the expectation of the stakeholders. And sometimes if we want to go to equity based, so most probably we have to move out from the banking environment and we have to go to equity or private equity market. Because private equity does not regulate by the Basel requirement with the element of capital charge and the same treatment on the capital adequacy with the conventional counterparty. And number two, I'm worried with the increasing regulatory compliance costs faced by Islamic bank in the market. We are small banks, especially for full-fledged Islamic bank like Bank Islam, Bank Muamalat, and so on, where we are not part of the leverage model. For the leverage model, they can rely on the conventional parent company for risk management, for credit administration, even for internal audit. But Islamic bank, we have to have everything. So if you go through the list or the report by Bank Negara with regard to cost to income ratio, you can see that Islamic bank, one of the Islamic bank in the market, I don't want to mention any name here, the cost to income ratio is 80%, or more than 80%. Means for every single ringgit recorded by this bank, 80 cents goes to cost. 80 cents goes to the cost. So in terms of regulation, the Sharia governance framework itself, for example, give more cost to Islamic bank. Compared to conventional bank, they are not required to recruit Sharia officers, but Islamic bank, to fulfill the Sharia governance framework, they have to recruit Sharia officers. Being the head of division, I can see that the cost of Sharia officers now is getting higher and higher. Recently, I received a resume from an officer. He just joined the market for 4 years by asking for 10,000 ringgit. So that's, for example, in terms of cost of regulatory, in addition to other FETCA, AMLA, and so on, and even the recent recommendation by Bank Negara for Islamic bank to segregate between deposit and investment, so require additional system for Islamic bank. So that's all the cost of regulatory compliance that will make the cost to income ratio of Islamic bank worsen compared to conventional bank. Okay. Third point. Of course, despite the challenges, I believe we are on the right track when the regulator issued a lot of documentation and guiding documents to facilitate the financial stability of the market. When I was in Dubai, the market is considered a self-regulated market. For the Sharia governance, everything is relying on the Sharia committee. So, in terms of fiduciary duties towards the customers, I will say that there are elements of unreliability. Because everything can be finalized by the Sharia committee, there is no element of supervising from the regulator. And sometimes the Sharia committee members cannot allocate adequate times to deliberate things. Even the Sharia audit reports, for example, sometimes will be decided by the head of Sharia of the bank. But at the end of the year, the Sharia committee will issue a report that the banks, on the extent that this bank, within this financial year, are in compliance with Sharia rules and principles. And sometimes it's too good to be true. Okay? And moving forward, number 4, the industry, the players must be more knowledgeable. Even for Sharia fraternity like me and my colleagues here, we are required to get additional knowledge with regard to risk management, for example. So, although Bank Negara allowed that risk management can be performed as part of the enterprise risk management guideline for the bank and can be performed by the qualified risk managers of the bank, but managing risk management, managing Sharia compliant risk is different from managing operational risk. Take, for example, if we want to go to a branch, asking the risk owner at the functional area, the branch manager, to declare what are your operational risk exposures. I believe he can easily identify what are the risk, operational risks of the branch. But when it comes to Sharia compliant risk, he will require knowledge. And the best person for me to facilitate and to work together with the risk managers to identify the risk are Sharia background risk manager. Sharia background risk manager. So this opportunity will give more or we require additional knowledge to the Sharia fraternity in the market. We have to manage, I believe, in terms of tools, the tools and the guiding principles issued by the standard setting bodies are acceptable. Even when we at Bank Islam first established Sharia Compliant Risk Management Department back in 2004, our first reference is the best practices of operational risk management issued by Basel II. Issued by Basel. So the Basel recommended 10 guiding principles how how financial institutions should manage their operational risk. So we are looking at the same principles. Then we were trying to translate the requirements in the Basel best practices of operational risk management into management of Sharia compliant risk. So the same thing, the same principles, but the only difference is the type of risk that we are managing using the same guiding principles issued by Basel. So the process must be similar, I believe, but the tools can be developed. The tools to how we want to identify, followed by assessing, and then control. Then we can move the risk or the inherent Sharia compliant risk to residual risk for the Islamic financial institutions, and followed the tools to report and to monitor the Sharia compliant risk for Islamic banks. So this will be the challenge for the future, and same goes to auditing. Although we have some different compared to the Middle Eastern countries in terms of Sharia audit or tadqiq syar'i. Here, Sharia governance framework of Banegara allow Sharia audit to be conducted as part of the thematic audit of Islamic financial institutions, compared to the documents issued by IOFI on the governance standard of IOFI with regard to Sharia review. So the audit must be performed by the Sharia scholar, not individual or auditor as recommended by Banegara. But I believe that the current auditor may be educated to get necessary knowledge and to implement audit based on the tools that can be developed in the market. So here in Malaysia, there are several, for our experience in Malaysia, in Bank Islam, there are 3 risk areas that must be considered for Sharia audit. Number 1, with regard to treasury. So this is one of the risk areas. There are gaps of knowledge between the Sharia fraternity with the treasury practices. Secondly, with regard to trade operations or trade finance, because of the nature of the trade transactions, sometimes it is not a plain vanilla product. The bank will try to facilitate the requirements of the customers, and sometimes customers have connection with their cross-border parties, and the practice of the other parties are different from the practice in Malaysia. So Sharia auditors and Sharia reviewers must have good understanding on Sharia on trade finance in order to perform their roles in effective manner. The third areas will be on recovery. Recovery. Why? I believe you know what are the rules of recovery. They will try to collect the money using soft approach or hard approach. That's the KPI, isn't it? To collect as much as possible. And their initiative and sometimes creativity, sometimes expose the Islamic bank toward Sharia non-compliant risk. So this moving forward, these three areas must be taken care in order to ensure that the bank are fully compliant with the Sharia rules and principles. Thank you very much.
Thank you very much to Ustaz Nazri. Ustaz Nazri had actually discussed on a few issues, particularly on the increasing regulatory costs in comparison between the Islamic banking and also the conventional banking. He had also touched on the Sharia governance, which is always relying on the Sharia committee, and also the additional knowledge for the Sharia scholars, particularly on the risk management areas. Before we proceed further, I would like to share with the floor on some information, particularly on the Sharia review. Sharia review is considered as the second line of defense, where the Sharia review conducted the Sharia compliant function in a bank, whereas the Sharia audit plays the role of the third line of defense, which conducts the periodical assessment from time to time to provide an independent assessment and also objective assurance designed to add value and improve the degree of the compliance in relation to the Islamic financial institution business operation, with the main objective of ensuring a sound and effective internal control system for the Sharia compliance. Before I open to the floor on the Q&A session, I have two questions for both speakers before I open the Q&A session to the floor. Okay. The first question could be Mr. Khairuddin or Ustaz can answer. How types of risks, as an example of the credit risk, market risk, relate with the Sharia compliance of an Islamic bank? The second question, where are we right now in terms of the level of Sharia compliance and also the Sharia risk management framework in Islamic banking?
For the first question, how credit risk relates to Sharia compliance of Islamic bank, I'm looking for a macro perspective. Number one, what is the role of the bank in financial intermediary wisatah maliyah? The majority of our deposit are based on mudarabah. So the bank is a mudarib. The mudarib means the funds manager. We have the fiduciary duties towards the fund owner in managing their fund, and we are using the fund for our financing. So the financing part is the credit risk exposure of the bank. So looking from, if we want to talk about maqasid since yesterday, I believe that the speakers were talking on maqasid. So what is the maqasid of the bank? So among others is to safeguard the interest of the customers. So implementing effective and efficient credit risk management from the recording or the assessments, having a good credit analysis, and then good credit risk appetite, even with regard to credit risk mitigation techniques applied by the bank, is part of the Sharia compliant objective of having Islamic financial institutions. Same goes to disclosure by the bank. When Bank Negara in Malaysia, for example, issued the market conduct documents, asking the bank to have product disclosure sheet prior to having relationship with the customer. At 2 stages, when the customer approach the bank for facility, so we have to provide the product disclosure sheet explaining the type of contract and the right and responsibility of the customers under contract. What are the customer's right pursuant to the default in paying the installment or the obligation. Looking from Syariah perspective, I believe this is what Syariah require. When Syariah in any type of contract require declarations of offer and acceptance, ijab and qabul. So what are the very objective on ijab or qabul is to reflect the mutual consent between the contracting parties. As Allah Subhanahu wa ta'ala mentioned in the Quran, Ya ayyuhalladzina amanu la ta'kulu amwalakum bainakum bil batil illa an takuna tijaratan antara minkum. Allah promoted the notion of taradin, mutual consent, willing buyer and willing seller. So facilitating and inform decision making by the customer by in credit transactions is as part of the Sharia requirements. On the other parts, on the credit risk mitigations, I believe that looking from the perspective of Rohan, for example, taking collaterals, not all type of collaterals are acceptable to Sharia. So the marhun must be Sharia compliant, and of course scholars came out with parameters on the marhun, and marhun is part of the credit mitigation, CRM, credit mitigation techniques in managing credit of the customers. That's on the macro perspective, and of course on the micro perspective, it goes back to the type of relationship between the bank and the customer, whether it is murabaha or musyarakah. So we have to comply with the type of relationship. Take for example the very intention of issuing ifsar on the asset side. Although we keep talking on the liability, right, in the market because of the new segmentization of deposit taking by the bank to be classified according to deposit definition or investment definition. On the asset side, the IFSA requested the bank to appreciate and satisfy the type of relationship between the bank and the customer. So if the transaction is based on istisna, so we must honor the rule of istisna. If the transaction is based on murabaha, we must honor the type of relationship, credit relationship between the bank and the customer. So in the market, now we are waiting for the Sharia standards and operating requirements to be issued by Bank Negara. Of course, there are positive side of the standards as well as the negative side of the standard. On the positive sides, the standards will be useful in streamlining the interpretation of Sharia across institutions, and it will serve as a guide to the bank for product development. But on the negative side, we can see later emerging legal risks of the Sharia issues in the future. Take our experience at Bank Islam, the case of Tan Sri Khalid, for example. So what was happened during the case? Among the argument was, he declared that the relationship between Bank Islam and Tan Sri Khalid was void at initio, from the early beginning, from Sharia perspective, because of the transaction executed between him and Bank Islam was not Sharia compliant. And he brought a scholar to the court, expert witness to the court. And this scholar wrote the report before the court and presented the report before the court, declaring that the transaction is not Sharia compliant. And Bank Islam, we brought another scholar. And the scholar wrote a report to the court and declared that the transaction was Sharia compliant. Then he brought another scholar from Bahrain with another report, declaring that the transaction was Sharia non-compliant. Then Bank Islam, we used the right under Section 151(1)(a) of Central Bank Act 1958 that allow the court to refer to the apex authority, which is Sharia Advisory Council of Bank Negara. So the court agreed to refer to the Sharia Advisory Council of Bank Negara, and there was a decision from the Sharia Advisory Council of Bank Negara. I don't want to declare here, okay? But the impact was applied to all players in the market. I believe that after the case, Bank Negara, Sharia Advisory Bank Negara issued the guideline on the implementation of resolution of Sharia Advisory Council of Bank Negara with regard to Bayinah to all Islamic financial institutions in the market. Okay, that one case. In the future, we will see 10 new Sharia standards. And it is clearly mentioned in the recital of the standard that this standard is considered as published rulings of Sharia Advisory Council of Bank Negara. So my head of Sharia colleagues here, get prepared. Later, among the arguments to be posted before the court is the arguments of the Sharia, and these Sharia standards will be used as the reference by the solicitors before the court. So that's the Sharia compliant aspect of the credit relationship between the bank and the customer. On the second question, I will answer later, inshallah. Thank you.
Okay, I look at the risk in terms of the Sharia compliance, two different things in that manner. Because for me is, one is basically the inherent risk of the transactions, regardless whether it is conventional or Islamic. It's just that different kind of transaction bring you different kind of risk exposure. Okay, whether the risk relates to the Sharia compliance, I think it has to be looked from different angle altogether, but it is complementing. In terms of the level of Sharia compliance and risk management in Islamic Bank, I think that element of risk management and compliance has been getting more sophistication as the industry grows. Okay, we have more experience, more knowledgeable people. When we are already being issued so many new requirements and guidelines coming from the central bank, arising from the different crises that we have gone through since the beginning. So you can expect that the requirements in terms of the compliance and risk management is higher in terms of the expectation. And in terms of the implementations, that you have to answer at the individual institution level. Because in terms of understanding is one part. In terms of the implementation is another part. Because it depends on your maturity. Whether your people, your process, your system already understanding that particular compliance requirement or the risk management requirement. So at the end of the day, you look around you in your institutions, whether the element of risk and compliance culture exists in the institution. If it exists, it basically demonstrates that the level of risk and compliance in that institutions. Okay? Quite easy in a way. You can see that. But as we grow and more requirements coming in, it will be a challenge. And as we go along, it's like every day it is a day that you expand your knowledge, your understanding, and how are you going to apply it on your daily transitions or daily works. Okay.
Actually, I do have a few more questions to ask the presenters. If I were to ask this question, I am not being fair to the floor, Okay, so now I open to the floor on the Q&A session. Please state your name and which organization are you from?
Assalamualaikum. My name is Mahathir. I'm from High Tech Padu Berhad. I have a question for our guests. In relation to inherent risk, which is mentioned just now, I know of a new home financing using BBA case, whereby the client has fully paid his financing to the Islamic bank, but the house is not completed. What are the operational procedures to mitigate this risk, and what is the Sharia compliant recourse in this case? Thank you.
Can we take the first question to be answered first?
The question relates to abandoned projects, isn't it? Huh? And we are in the market, we are in continuous discussion, especially with PPIM, Persatuan Pengguna Islam Malaysia, on this topic. I'm not sure about your question when the customer already fully paid the facility, but the house is not yet ready. But most probably, the majority of the cases, the customer only paid half of the obligation, but until now, the house is not yet ready. We have difficulty on this issue because previously in the market, the house was financed under the rule of Inah, looking from the perspective under the rule of Istisna. Inah, Bai'ul Inah, under the rule of Istisna, from the perspective of Ibn Qayyim and Ibn Taymiyyah, that allow selling of uncompleted asset. But the problem, looking from legal obligations, normally customer already entered into SMP with the developer, and the bank will purchase from the customer by executing property purchase agreement, and then on cash basis, and then sell the same house to the customer on principal plus profit, pursuant to property sale agreement. So when the house is not ready, the arguments now in the discussion is who is the responsible party to deliver the house. Because there are three istisna now. The first SMP is istisna. The second purchase between the bank and the customer is also istisna. And the third, the final leg between the bank and customer is also istisna. I believe there are differences of treatment between Islamic banks in the market. But for us at Bank Islam, and it is applauded by PPIM because it was mentioned in their letter, recommending other Islamic bank to follow Bank Islam, because we return some portion of the money to the customer. We return some portion of money to the customer, and the situation is unavoidable situation because it was happened back in 1990s, where the regulation with regard to residential property market was not that, or not as we have today. A lot of non-developer or which is not in terms of competency to complete the asset is questionable, offered their facility, and even for for the bank at that point of time, there are no additional requirement imposed by the regulator that we have to check, to perform additional checking the customer. So the transaction relates to everybody. To the bank, we face difficulty. To the customer face difficulty. So based on this, our Syariah Committee at Bank Islam, we think of a win-win decision. Win-win decision where the customer, yes, of course, we already disbursed money. We lose. Already disbursed to developer according to progress report provided by developer. And it is not the bank's money. It is depositors' money. If we go through the balance sheet of Islamic Bank in the town now, you can see that I can't see that any Islamic bank that have shareholders fund more than 10%. In our case at Bank Islam, 90%, more than 90% of our business fund come from depositors. So when we disburse money, it is not the bank's money, not the shareholders' money, but depositors' money. They are looking for their money as well as the return. And then, yes, we have empathy on the customer because you are dreaming of your house, but finally the developer ran away, and then we start with the issue of abandoned projects. So the only solution is for the government to step in to revive the project. And we can see now Syarikat Perumahan Negara Berhad, SPNB, step in to revive some of the projects and then to give offer to the customer to get into the house. And we again have to remanage the new house according to the established obligation according to Syariah between the bank and the customer. Previously, our contract, we have to deliver, say for example, double-story house. But now, the new revived house by the SPNB is single-story house. So the subject matter of sale, Al-Mabeh, already changed. So what are the Syariah treatment on that issue? So all those issues already discussed by the bank and the customer. So pursuant to that, if you can remember, in 2007, Pak Lah, the previous Prime Minister, announced in the budget that moving forward, the residential market in Malaysia must be built according to BTS, build then sell approach. Already announced in 2007, 7 years ago, but until now, we still have difficulty to implement BTS. Why? Because BTS can only be implemented with the agreement from REHDA, the Residential and Housing Developer Association. So we participated in various working group together with Jabatan Perumahan Negara, together with representative from our association IBIM, and together with REHDA. So what was the negative of BTS to REHDA? Because BTS currently, for a residential estate with a GDV, gross development value of 100 million, for example, if a particular developer have 5 million ringgit, they can already started the project. 5 million ringgit, then they can look for the bank asking for 35 million bridging finance, and then another 60 million ringgit come from the end financing. Under BTS, the 60 million is not there. So, most probably they can only get 35 million bridging financing from the bank, and they must have 65 million ringgit from their own pocket to match the 60 million ringgit of end financing under the previous arrangement of housing development. So, there was rejection from REHDA on those issues. So they are not agree with that, and of course they will provide all the arguments why BTS is not viable, and then following the Australian market, Singapore market, and so on. So we hope for the better future on this issue. And of course, some people are happy of BTS. There will be no element of abandoned project anymore. But bear in mind, once the house is completed, the price will be picking up. You are purchasing the house of 250,000 ringgit now because it is under development. But when the house is completed, most probably developer will sell the house at 100% higher price than the price when the house is under development. So that's my reply to you. Wallahu a'lam bissawab. Hopefully satisfied. Thank you.
Thank you very much, Ustaz, on the first question. Can we go to the next question?
Assalamualaikum. My name Muhammad Pisol bin myself from UTP. I do agree with, first of all, thank you very much for the enlightening, talks, views from our two speakers. I do agree with Ustaz Nazrici on his remark on the Islam allow the debt base and equity base, which is al-bay' ila ajal, which is mashru', no problem. But the issue which I see, we try to create profits based on that base. I think this is harmful from the Sharia context, and then even from the, of course, they will create a riba. كل قرض جر منفعة فهو وجه من وجوه الربا. I think this why create a lots of contentions among scholars. And today we talked, even last day, we talked about, maqasid sharia and everything. So I believe that the maqasid sharia, which is come from the interests of every parties, the industry interest, which is to get or to generate as many as profit they can, isn't it? And the people, customers, especially the needy, of course, their interest is to get help and assistance from the others, from the wealthies. And the wealthies are those who has big deposits, depositors, of course, most of the depositors, they deposit the money in the banks. And of course, everyone have their own interest. The Sharia people, they try to get everything, follow in line and comply with the Sharia. And I do not know, when we go back to the classical, Quran and Hadith, we see how harmonious the world is based on Islam. And now we have Islamic bank. For example, Al-Mal, Malullah, which is not Al-Mal, the wealth, is wealth of Allah. And then we quote again from the Quran, Kaila, all this mal, Kaila takuna dulatan bainal agniya minkum. All this wealth, which is supposed not to circulate among the wealthiest people. But again, when we see, from the principle and philosophy of the Islamic finance, Islamic bank, we believe that all the players, workers, researchers, they all understand all this philosophy behind how and why we have this Islamic finance. And I do not know as well whether this is the philosophy and the interest of the government having the Islamic banking. They have only getting an interest, or to get the profits, just that. That's why we have even the microcredit as well. Even those who try to get, for example, we have discussed about Ar-Rahnu, where the needy, they go to the Rahnu institution to get the loan, benevolent loans for 1,000 or 5,000, and we charge them, which is not charged, with but jarra manfaatan, we still to get the profit, even this needy and the groups of lower income earners. I don't know, I try to, is it timely for us, for example, to suggest for the depositors, the wealthy, to provide a certain percentage from their big portion of money, for example, 1% of them, for the microcredit, which is for the benevolent loans. Just 1% out of 100,000 or millions of money. I don't know whether this is workable or viable or not. So need to get your opinion. Thank you very much.
I hope next question will be posted to Encik Khairuddin. Thank you, Ustaz Faisal. Firstly, before I answer your question, so I have two remarks. Number one, not all type of debt is riba. So murabahah is murabahah. When we sell something on murabahah, so we create debt. The debt relationship is there, but it is not riba. So it may tantamount to riba when we ask the buyer or we impose additional amount on the buyer upon the delay in paying the obligation, the debt under created pursuant to murabahah, which is considered as riba jahiliyah, but it is not riba al-qard. And secondly, getting manfaat on something is acceptable to Sharia. Even the term murabahah itself reflects the mutual taking of profit agreeable to both parties. That murabahah ala waznil mufa'alah. And Allah subhanahu wa ta'ala even mentioned in the Quran the word of yadribuna fil ard, the issue of darbun, which is looking for return, additional amount, money, and so on. I always sharing with my colleagues or in masjid sometimes with people that we have to differentiate between economy and finance as well as banking. So economy is another thing, finance is another thing, and banking is another thing. Same goes to when we discuss on the issue of introduction to the Sharia, madkhal al-Sharia. There are differences between the word of al-Sharia, wal-hukmu, wal-qanun, wal-fiqh. Although sometimes we say Sharia Islam, fiqh Islam, undang-undang Islam, Islamic laws, and so on. So there are differences. It cannot be simply used interchangeable. And same goes to Islamic economics versus Islamic finance versus Islamic banking. If I can describe what is economy, economy, we can draw a big circle. This is economy, and within the economy there are another smaller circle, which is finance, and within the finance there is another smaller circle, which is the banking. So banking is part and parcel of the finance system, and finance is part and parcel of the economy system. But economy is not banking only. There are a lot of things within the economic activities, the real economic activities. And even politicians, they keep talking on the economics. So your question most probably relates to achieving the Islamic objective of the Islamic economics, which may be contributed by Islamic banking industry as well as other sector. Our Datuk Dr. Abdul Halim Ismail, the recipient of the Royal Award in Islamic Finance, the recent gift. Last week I attended a workshop to discuss on his recommendation with regard to Baitul Sadaqah. So he started his keynote address with segregation of sector, from sector ijtima'i, sector tijari, and sector siyasi. The private sector, the role of the government in the economy, and then the private sector, the business sector, as well as the social welfare sector. So expecting Islamic bank, which is only part and parcel of the financial system, which is indirect funding, with its limitation, where sometimes we have to move from indirect funding to direct funding. For bank, we manage the asset and liability, but sometimes we have limitation. Take my bank, for example, Bank Islam. We subjected, and all banks in the town are subjected to single customer limit requirements of Bank Negara, 25% over shouldn't be more than 25% of the capital of the bank. So the maximum facility can be granted by Bank Islam is mere 900 million ringgit. But should we have a big project here, such as MRT, that's the possibility of getting all banks in the town to finance on club deal basis, most probably will not able to meet the requirements of MRT project. So we issue sukuk. So sukuk is no longer part of banking. We only facilitate the transaction to become the legal advisor, arranger, sharia advisor, so on, but it is not banking. Same goes to the financial inclusions. Ar-Rahnu most probably is only one part of the microcredit of the Islamic banking. But to finance this undeserved or the poor market of the community by financial inclusion sometimes is not viable for, using the banking transactions. Take for example, if you give financing without any collateral, Ar-Rahnu, because there are collateral. But if you give something on clean basis, it will attract additional capital charge on the bank. And sometimes the microcredit, the size is very, very small. The size is very small, 5 million ringgit. And different game of business compared to the bank. We can see the Amanah Ikhtiar and some successful microcredits in Indonesia, for example, the Tazkiyah microcredit. Different game from the bank. They have to go to the customer and meet the customer, even collect the money at the customer premises, not to wait for the customer to pay. And the customer most probably will pay on weekly basis, on small amount. So we must have additional staff only to collect 50 ringgit. And it will increase the cost of the Islamic bank, but it does not stop us to come out with additional financial inclusion initiative by working together with other institutions. We, on Amanah Ikhtiar, take for example, our recent success story. Working together with Amanah Ikhtiar and ARI, Accounting Research Institute of UITM, and with the blessing of Datuk Amer of Maidin, with a group of people, group of makcik in Kuala Selangor, group of makcik in Kuala Selangor. So the makcik, they are tailors. Okay. Then we managed to approach Datuk Amir Maidin. Could you please provide the materials? Amanah Ikhtiar will provide the loan in order to purchase the machineries. You provide the materials, and then you will market the end or the shirts to be sewed by the makciks. But the challenge, number one, makciks themselves. They want to work at their house. And when Datuk Amir said, you must produce 800 baju kurung a week. Makcik shocked. How can 800 baju kurung a week? We told the makcik, we have to change the way of doing things. Take the factory line perspective. Kan? One party, one group of people will do the measurement and finally buttoning and so on. But if you want to do on your own everything, we are not able to produce 800 baju kurung. So that is the first model. Now we are looking at Islamic bank. Can Islamic bank replicate the same model to replace Amanah Ikhtiar, being the funder with a specific organization like Amanah Ikhtiar that can go directly to the customer to collect on weekly basis, and then we must have another Maidin in order to market the end product to be developed by the group. So that financial inclusion initiative, including most probably we are the best institution, the most professional institution, banking industry, to develop the wakaf, cash wakaf initiative, to get public from the, to get fund from the private sector from the rich person, from the institutions, donating into a fund, using the channels of the bank, collecting, Bank Rakyat, for example, having more than 150 branches, and then using this fund to finance the requirements of the undeserved market. So, for me, we can achieve the objective of Islamic economics by sharing our professionalism with other institutions, wakaf, with zakat, and so on. Then, inshallah, we can achieve what you mentioned, kaila yakuna dulatan bainal aghniya minkum. But don't put all the expectation on Islamic banking institution only, because we are facing a lot of difficulties in terms of regulatory requirements, not imposed by Bank Negara, but imposed by the global standard setting bodies. Wallahu a'lam bishawab.
Thank you very much, Ustad. Before we proceed with the next question, I would like to actually share with you, particularly on the first question just now, which was actually on the BBA housing financing. Please do tell your brothers and sisters, uncle and aunties, friends, relatives on the Bank Rakyat housing financing. Okay, can we proceed with the third question?
Assalamu alaikum. I like to digress a little, though without making my own submission to be different from the issues that were already discussed. With the current call for financial institutions globally to embrace international financial reporting standards, that's IFRS, in order to enhance standardization and facilitate comparability among operators in the private sector. I am foreseeing some challenges for Islamic banks when it comes to the issue of reporting their activities in line with IFRS, because some of the provisions of IFRS or some of the standards are going to pose some challenges. For example, when we take the case of Murabaha or Mudaraba, where maybe the financing, the period of financing extends to more than a year. IFRS saying that at the end of the year, we have to actually know what we have given, and then we bring it back so that we can write it we can write it as part of the date that is owed to us. And we know that in the case of Murabaha, it's not really a kind of, say, like the normal dates in the conventional sense, whereby you can classify it as either a performing or non-performing loan, but rather it's an agreement, installmental payments over a period that has been agreed upon. So what will be your take? What's your opinion, concerning this IFRS with regards to Islamic banks? Of course, I know that, or I was made to understand that in Malaysia, even the IOFI that has been around for some time, Malaysia use it and also use its own domestic standards or local standards. Now with IFRS, I don't know in Malaysia, and what will be your advice to countries like Nigeria, where we are not actually operating a parallel system, so to say, but that the baby Islamic banking project is being operated within a conventional system, not parallel, but within a conventional system. So what will be your advice to maybe countries like Nigeria? And then what are you doing in Malaysia with regards to IFRS vis-a-vis comparability and standardization? Thank you.
Question to Mr. Khairuddin.
Okay. I think only in Malaysia, there's only law requiring the entities in Malaysia to report in accordance to the Malaysian accounting standards. So, unlike the others, the IFRS is basically a standard that you have to adopt, and you can state if you are basically adopting other standards, then you have to stay in your accounting reporting, okay? Your financial reports. But in Malaysia, you are obliged to comply. It's issue of requirement, legal requirement. Having said that, in Malaysia, we are going to adopt the IFRS. Now, for Islamic transaction, we have already a group within the MASP looking after the Islamic financial transactions. How is going to be treated? Are we talking about substance over form? Form over substance, that already passed. Now the issue of murabaha, whether we're going to take every step of the transactions, or are you going to record at the end of the transaction in terms of the financial impact? So this was discussed previously, and at the Asia Pacific region, we are already having a committee that going to be representing the views within the Asia Pacific on the Islamic transition and forwarded such views to the IASB. So when you are in a group, your views will be noted, and any deviation from the standards, we expect that this working group will try to coming up with a proposal on how can the IFRS being applied for the Islamic financial transaction. Because at the end of the day, you are talking about comparability, you are talking about good records being maintained, and the documents reflects true and fair view of the financial performance and standings of the entity. So that's basically talking about the IFRS.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fatima from Bank Rakyat. I'm doing Sharia Risk Management. I have two questions. First, Bank Negara Sharia Governance Framework for IFI has outlined the four main Sharia compliance functions, which is Sharia research, review, audit, and supported by risk management. In your opinion, do you see any significant interrelationships between these four functions, and how these functions support each other in terms of upholding the Sharia compliance aspect of the institution? Second question is, Sharia governance framework outlined that Sharia review function have to ensure compliance with regards to the underlying principles of Sharia, but exclude the legal and regulatory requirements. Having said that, do you see any function of Chief Compliance Officer in respect of compliance with the Sharia requirements? Thank you.
Thank you, Ustazah. And this would be the last question for our session today. This question is actually to Mr. Khairuddin or Ustaz.
Mr. Khairuddin said, she's my staff, so better you answer the question. So, but she was part of my team when she was in Bank Islam. And then the last question sound question 7 of the recent concept paper. Exactly.
Compliance.
So now you are gauging our answer from Bank Islam. The role of CCO. Okay. Being regulatory, I have to abide to the Sharia governance framework issued by Bank Negara. But my personal view, I don't want Sharia review. For me, the three functions are more than enough: research, risk, and audit. But of course, we are waiting for the full documents to be issued by Bank Negara to guide us on the implementation of Sharia review. Hopefully, they will issue the Sharia review framework in the near future. But looking from compliance perspective, if we take review as part of compliance, I will say that the difference between these three internal compliance functions, Sharia compliance risk, is responsible to highlight the risk. Of course, a proactive approach to work together with the functional areas to identify the risk, to develop the scorecard, then the functional areas fully understand the inherent risk in their operations. And then the Sharia review, the keyword is to perform validation process, validate the validation process, and of course audit as being described by the documents. COSO, for example, always performing the role of independent assurance. So, and even recently I read an interesting book giving comparison between the role of CIA against the role of CRO. So the author said that the CIA is responsible to ensure that CRO perform his job. So the job of CRO is to highlight the risk and to facilitate the risk management process of the bank, and then CIA assure that yes, the risks are mitigated and managed properly. So Sharia review in the current environment most probably looking on the validation process. Yes, Sharia research already working together with the product developer and perform in-depth research prior to approval of the product by the Sharia Committee. Sharia Committee may issued their qarar resolution, but Sharia review must perform the validation role to confirm that the resolution of the Sharia Committee are complied with by the banks. So on the CCO, now of course our Sharia governance standard only recommend on the model of Sharia governance framework, and of course it does not fit all. At Bank Islam, I believe it is different from others. All the three function reports to me. Sharia compliance risk report to me, Sharia review reports to me, research reports to me. But Alhamdulillah, as yet, Bank Negara does not issue any negative remarks, because Sharia governance framework should be taken from principle-based perspective. As long as you can comply with the principles laid out by the Sharia governance framework, so it is considered done and in compliance with the Sharia governance framework. Thank you very much.
Okay, you just give me my personal view on this. Probably because I think we look at, with regards to the requirements on internal of the Sharia functions, I'm not going to tell whether it's right or wrong, but rather looking at the level of the concept of first line of defense, second line of defense, third line of defense. The first line of defense is basically talking about all the business units. The second line of defense is the control functions. Okay? And the third line of defense is the assurance side. So the issue at hand is, for example, you're talking about the compliance, you're talking about the risk management, most of the time you reside in the second line of defense. What would be the difference between risk? Risk is talking about anticipating. Okay? If you are already happening and you are trying to manage that things which has already happened, you are not managing the risk. You are administering the risk. Okay? It's already post, not pre. Compliance is to ensure that whatever mitigation that's being taken in place or controls that are already being put in place is being complied with, apart from the regulations and internal controls. And they are doing it on continuous basis. The auditor is basically ensuring that on a periodical basis, what will be the higher risk, that's where they are putting their efforts, because they have their scope and they are looking, ensuring to provide the word assurance. Now, having said that, now in terms of the Sharia, they are conducting research, they are conducting peer review, they are compliance, talking about risk. So the issue at hand is, can they work effectively? Is there any conflict of interest? You are reviewing, now you are managing the risk, you are ensuring that it is happening, pre and post. Does it work or not? Is there a conflict of interest of it? So the issue at hand is, that is the underlying thing. If you can assure yourself that everything is being properly managed, then it's okay. See? So, but for me is, if you are conducting research, you're working with the product, then you have to ask yourself, Are you control function? Or are you a business unit? Because you have to understand, the research is very big. It's not talking about, it's like a 3 days, 4 days. No. You're talking about if you are innovative institution, you're thinking about introducing new things, there's a lot of things that you're going to coming out with under it. And I'm not so sure, are you have the capacity and capability just looking on the research part. Then talking about the pre-review, prior to going to the central bank, and then the post-review on the compliance, and of course the risk. So at the end of the day, the issue at hand that you have to look at, based on the principle, is talking about, is there enough check and balance to ensure that the process is being properly managed and controlled? Thank you.
Thank you very much to both of our presenters, Mr. Khairuddin Arshad and Ustaz. To these notes, we have to end our session. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Thank you very much.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you very much, Dr. Badrul Hisham, for conducting a very informative session. Also, thank you to both discussants for an excellent and extensive responses to both the topics raised by the moderator and also the questions raised by the floor. Ladies and gentlemen, that brings us to the end of today's proceedings and also the end of Bank Rakyat's International Islamic Banking Conference 2014. On behalf of the organizers, we would like to thank everyone for your participation and look forward to see you at our future events. We do apologize for any inconveniences or shortcomings that we may have had during the event. In order to improve our future events, we would appreciate if you could complete the evaluation forms before you leave, and please do not forget to collect your certificates of participation from the registration counter. With that, please join us for some light refreshments before hitting the road. We wish you a safe journey. Wassalamu alaikum wa rahmatullahi wa barakatuh.